So the signs are piling up that the lithium market, which is about 16 million in value, is turning a corner. And that's what we're going to be talking about today. First, just in August, we saw the Jianshao, Chinese mine owned by CATL, being halted due to a permit issue, permit expiry. And at first, everybody was saying this is going to be solved very quickly. So, stocks came up and down, and there was immense volatility. There has been immense volatility over this period because of all this, back and forth of whether the mine was gonna go back online quickly. But guess what? It's December. It hasn't happened. So this was obviously not an easy solution. Otherwise, they would have solved it. And that in turn has started building up a massive change. And I started talking about this in September. As you can see here, and I have a few videos that we posted as well. And lithium prices are recovering. Demand is starting to finally recover. But here's what the thing comes, or here's what the interesting bit appears, because it's probably not from where you'd expect, which is the typical sort of driver EV. So it's not coming from there. It's coming from BESS, which is the acronym for battery energy storage systems. Sometimes it's referred to ESS as well. One example of these are what we see here, the Tesla's mega pack and mega block. And you can see how these installations are very modular. The thing is, they are growing much faster than expected. And that's where, and we can see another shot here with the little brand there, the Tesla brand. And here's where we get to a very interesting analysis. So we have this chart that we've compiled with information from Canaccord, Romotion, CATL, and the International Energy Agency. And this is a review of the decade, so 2021 through 2030, where we're looking at BESS installations. So we're seeing the capacity, and at the end, we have a look at demand. So let's remember that we're going to zoom in on these charts. So we have in gray the operational installations, they're already operational. In blue, we have under construction, and in light blue, we have the planned ones. And demand is going to be in a shaded blue as well. So here's the bigger version. So if we look here at the figures for 2021 versus 2022, we can see a big increase right there. The same thing, nearly or more than double on 2023, a substantial increase for 2024, and the expected figure for 2025 is quite big. It's more than double from the previous year. And we're going to have to see how that tracks in the end, next year, when we have the figures for the end of the year. But we can also see what the projections are for 2026, which is 36 times what we had in 2021. So that's a massive, massive growth, right? And now, you may think, if you look the rest of the decade, you say, oh, maybe this is really, not that optimistic, or is super cautious. But the thing is, these installations have very short or relatively short lead times. So between 6 to 18 months, depending on the scale. So obviously, the bigger they're gonna have a longer lead time. But this is telling us that by 2026, we're going to start to see a lot of built-in or expanded capacity coming in for 2027. So it's not going to be that figure that we see here. So this is going to be much higher, likely much higher. And yeah, and then we look at the figure, and I'm going to hide myself here. Just to show you the demand figure for 2030, estimated by the International Energy Agency, which is 1,200 gigawatts hour by 2030. So this is, this is substantial, very substantial. And in turn, we can see Canaccord is just seeing a bit lower. So they see 800 gigawatts hour and a cumulative 8 terawatts hour by 2035. Canaccord is seeing that these energy storage systems are going to be taking up 23% of total lithium carbonate equivalent demand over the next 10 years, up from 18%. So it's a substantial increase. The assets, so these installations, these battery energy systems, are going to be playing a key role, a star role. Maybe not as big as EVs, and there's a lot of discussion at the moment. Which one is going to be bigger, but I think the important part is that they're going to be a start in this new phase. And there's evidence of why people are talking about this so much. So we can see a view here in this chart by Benchmark Mineral Intelligence. So global deployments have increased 53% year on year in the first semester of 2026. And there's massive growth across Asia and South and Central America. And this is just getting started. So he's some of the largest projects. We're talking massive projects. So why is this happening? Why suddenly everything's talking about this? Main thing here is that the lithium battery packs, the costs have fallen by 75% since 2015 and 43% since 2022. So the last few years have been substantially improving the reducing costs. Why, in turn, are these costs falling? Well, first, we have cheaper battery raw materials with lithium, nickel, cobalt. So they all had ups and downs, and they're now in a more realistic, if you want, in terms of pricing. Secondly, we have the gigafactories creating massive economies of scale. The bigger you are, you can get better pricing, you can get better conditions. There's all these different things that apply to anything that grows in that scale. Then we have innovation and cost cutting across Chinese players. Like, they've been investing a lot in getting better and improving these their different technologies, and that's massively changed the cost of the packs as well. And fourth one is a shift to cheaper LFP batteries. We can see we've talked about this often. The different chemistries that a battery has. All different chemistries have different benefits and different pros and cons. And a pro in the case of LFPs is that you can use cheaper materials because you don't need some of the more expensive. You still need lithium, but you don't need some of the other materials that are sometimes more expensive, or at least more expensive than what goes into LFPs. So from the full use of BES, 15% was LFP back in 2021, and right now BES is 80% LFP. So that is massive. And obviously it's bad for nickel, bad for cobalt, and another components of the more traditional NMC chemistry. This is an insane expansion. Going forward, we see three key drivers for BESS. First, the firming of new solar and wind capacity, which is going to be coming in. Secondly, the optimization and stabilization of the grid on a systemic basis. And we talked about this before, but like if you want an example, this is what happened in South Australia. So having that support to protect the stability of the grid has been, and it's going to continue driving these installations. And we are seeing these as super important, key and central for the data centers because they act as UPS backups. So they're they protect all the networks within these AI data centers. And it all makes sense. Electricity demand from data centers is expected to balloon, reaching as much as 5% of total demand by 2035. That's big. We're talking a lot of capacity needed to fuel that demand, right? And these centers can use the same amount of energy as thousands and even millions of households. And here we have an interesting comparison by the International Energy Agency. We can see that a conventional data center can use as much energy as 20,000 households, and a hyperscale data center, so one a little bit bigger, is going to use as much as 100,000. And then you go into the largest under construction, and that uses as much as 2 million households. And the largest announced ever is going to use as much as 5 million. So yeah, that's a lot of energy. And what about EVs? Well, they are still growing, just a tad slower. The last figure that I have is 26% year on year, year to date. In sync, Canaccord, we're talking back to price. Canaccord updated their price deck, and I've always used them because it's what we use. So I'm always leaning on their assessment, and they finally updated this. We can see that they see prices improving strongly in 26 and 27, and we can see here in the chart. So we're seeing 18,500 these dollars per ton, and of lithium carbonate equivalent 99.5%. And so that's a 51% change from the previous estimate. The bulls are coming in. It's happening. Similarly, we saw this week that JP Morgan is also lifting their estimate to 18,000 and 2,000 for spodumene for next year. In terms of spodumene, Canaccord also lifted the prices to 1,600 for 2026 and 2,250 for 27. So to summarize and putting all of this or most of this in one chart is what we see. So we're ending 2025 relatively balanced with a very small, apparently it's going to be with a very small deficit, or we'll see, but it's going to be fairly balanced. Number two, price recovery is going to continue, and this is the price line. So we saw the bottom. Canaccord did call it in, I think it was July. We were feeling it as well, like kind of on our bones. And price expected to start recovery. So for 2026, are seeing, or most of the parties are seeing either a small oversupply or a small deficit. I think it's going to change markedly to deficit. We've seen a bunch of other names call that as well. So after preparing these, we did see new notes from JP Morgan and Deutsche Bank and one more that I'm not going to remember right now. BESS, UBS maybe. I can't remember now. So we're seeing that in 2026 and the price to continue recovering. So we're thinking 18,000 for 2026, and here we're seeing for 2027 we are seeing up to 25,000. This is obviously, someone asked in one of the other times that I tweeted with a similar chart to this. They said, "Oh, why are they thinking that this is going to fall?" It's always very common to see these projections that the further out they tend to be more cautious. Doesn't necessarily mean that they're feeling terribly, not optimistic after 2027, but they always want to take that cautious approach as years go forward. But as we look at when we're using these figures for MPVs and the closer figures are always going to have more impact in your model. And number 3, a shift to a small deficit in 2026, and we can see it here mainly in the blue. Then shifting to a larger deficit over 27, 28, and 29. And here's a possible side benefit. I reckon we may see more spillover from rare earth strategies, like Western supply getting further prioritized and even get preferred pricing, or governmental support. We already saw a tease of this with the Lithium Americas deal with the government, which they soared, went to up to $14 per share, and right now have retracted a lot from that high. But despite this pullback, they doubled in value this year. That could be, I think that could be on the cards. Overall, estimates now point to battery energy storage systems picking up the slack left by slower EV growth as data centers pop up across the world. So I've been working and investing in lithium for over 17 years. This is a volatile sector. It's still a nascent, growing sector that needs to fully come to its full size. It's still growing. So it's not really suitable for anyone with a faint heart, really, because it is volatile. And so what is your take in where lithium is going? So let me know in the comments. And if you enjoy this video, you will like this other one. This is an interview that we did with a former client of ours. That company is called Surge Battery Metals, and I think you will enjoy seeing that discussion. And